Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, it's a Wednesday morning. Lots of cues to watch out for. Auto sales will be coming in today. Lots of results reaction. In response to the L&T numbers that came out post markets yesterday. Bharti Airtel, Tata Consumer, all of these numbers came out post markets. So we will be reacting to that in trade today. And of course, we have the all important Fed decision later tonight, and that may keep gains or the Wall Street in check rather. But of course, over the next 30 minutes, we'll be talking about all the stocks in focus. And of course, we'll be taking up all your stock-related queries. So if you have any stock-related queries, send them in to us on our YouTube feed and we'll try and take them up. But before we go any further, as usual, let's take a look at the top headlines at this hour. Wall Street closes higher ahead of US Fed's rate decision announcement later tonight. US stocks end a brutal month with cuts of nearly 2%. Meanwhile, Asian markets edge higher, but the GIFT Nifty is indicating a flat to negative start for the Indian market. Oil prices dip as supply concerns arising from the conflict in West Asia ease. Brent slips below $85 per barrel amid easing supply concerns. And gold, in fact, also has come off the 2,000 mark as concerns over the escalation of the conflict in West Asia ease. Auto sales for October likely to be hit by the inauspicious Shraddh period, but Maruti could see a 15% jump in sales, on a YOY basis. Nomura expects strong two-wheeler sales, but passenger vehicle sales are expected to be weaker. L&T delivers a strong set of numbers in the second quarter. The infra giant says that it is likely to beat revenue and order inflow guidance for the year. Meanwhile, Bharti Airtel's earnings miss estimates as domestic mobile revenue grows lesser than expected, while Tata Consumer delivers a good set of numbers in the second quarter. Among key earnings today, Tata Steel, Sun Pharma, Hero Moto and Britannia, 4 Nifty earnings will be watched out for. So we will, of course, be bringing you updates as and when the numbers pour in. Well, without any delay then, let me get on board our technical expert for today. Joining me is Hemen Kapadia of KR, Choksey Shares and Securities. Great to have you on the show, Hemen. As always, yesterday, of course, we saw that the two-day gains fizzled out. October, in fact, has been a down month for the markets. We lost somewhere around 2.5% or thereabouts. Firstly, what are the levels you'll be watching out for on the index, given the fact that we have seen, a jump in volatility as well? And for the month of November, what is the setup looking like on the charts?
A very good morning to you, Nandita. Thank you for having me on the show. It's such a pleasure. In terms of levels, 19,250 on the upside is important resistance level, Nandita. 19,250 followed by 19,524. These are crucial levels. 19,852 currently is not applicable because it's too far away. On the downside, you have 18,888, 18,600 and 18,400. Like you've mentioned, volatility, the VIX has gone up. But frankly speaking, if you look at the CBOE VIX and our VIX, there's a huge difference. I'm not sure if the VIX is actually showing the real picture. But nevertheless, we've been in a small range. The outlook is still negative. It's a bit iffy. There's a recovery, not a rally. And if we have to make any further headway, Nandita, we need a close about 19,250. Till that doesn't happen, there is always the worry, maybe not today, tomorrow, day after, that we'll go back to testing the bottom posted on last Thursday, as far as the Nifty is concerned, at 18,332. Nandita.
All right, those are the levels to watch out for on the Nifty. But hold that thought, Hemen, we'll come back and talk about specific stocks and take up viewer queries as well. But let me also bring on board, our next guest for today. Joining me is Nirav Karkera of Fisdom. Great to have you on the show, Nirav, as usual. But, let me start by asking you about what you make of the L&T numbers. They were above estimates, of course. Profits jumped over 45%. But, the good part is the fact that the management, even though they haven't really hiked the order inflow guidance, they've said that they are on track to outperform the order inflow as well as the revenue guidance. But going forward, given the fact that we are entering an election year, pace of order inflows is likely to slow down. Given that, do you think the company is still on track to outperform its order inflow guidance of 10 to 12%?
Hey Nandita, always a pleasure to be interacting with you. So right off the bat, one thing is definite that the set of numbers posted are indeed stellar and highly encouraging. Talking about the order flows, the order book looks pretty robust at the moment, and the guidance also sounds pretty upbeat at the face of it. There is definitely a little bit of overhang, not just from the election standpoint, but also from the macroeconomic backdrop standpoint, wherein there could be a slowdown in the general overall, capex by the public sector entities. But this seems to be only transitory in essence. And even after we account for any slowdown in new order books going ahead, we believe that there could also be an angle wherein there are higher announcements and higher commitments made towards public capex, which L&T is quite banking on at this moment. So net, we still believe that L&T is indeed on track to expand its order books, and we're not just talking about the infra segment, right? We are talking about an order book uptick across various other segments. In fact, we are yet to see a full-blown recovery in the IT and IT services segment, which relies a lot on international billing. We are talking about energy projects that are in the pipeline and that are yet to come. There is a lot of energy transition projects that are coming through from the Western countries as well. And cumulatively, in fact, there an important element would be the high-tech manufacturing segment that has not seen a whole lot of buzz in very recent times, but it is yet to witness the uptick from increased spending on defense. This is a pure play, domestic segment that operates in the domestic segment. So a combination of increase in order books across these segments would finally accumulate and result in an increase in the overall order book that L&T could register going ahead. So while there could be certain segments that could fall slightly behind, we believe at an aggregate level the order book story looks really robust and promising. And we tend to agree with the management guidance. There is very little skepticism around that.
All right, that was about the order book picture. But, going forward, the company has, of course, announced a foray into chip design and not chip manufacturing, right? Because that's more capital intensive, right? But do you think this will be as large an opportunity for the company? How do you view this move of foraying into chip design and not manufacturing?
So, given at this point in time, considering the government priorities, considering the consumption demand for goods, including electronic goods and automobiles, which have a demand for microchips, and the sector itself, although the opportunity is huge and the current demand is also huge, it still remains a sunrise sector of sorts. So, the foray into the segment is indeed highly encouraging. The question is around execution. These are almost uncharted territories and untested waters for L&T at the moment. Of course, the group at a group level has the ability to build all requisite capabilities and capacities to grow in the segment, but it still remains uncharted territory. So from an opportunity standpoint, we believe it is a significant opportunity, and if L&T executes really well, we believe this could be the next big frontier for L&T. This could definitely claim a very important share in the overall P&L.
All right, moving on to some other stocks then, Nirav, very quickly, Tata Steel is, slated to report its quarterly numbers today. Do you think the weakness in European operations will continue to hurt earnings for the steel major?
Yes, so Tata Steel is set to post numbers. There are going to be, we are expecting a few, silver linings around the dark clouds. But the more important thing is that there are going to be dark clouds. The weakness, the overhang from the European markets will definitely percolate into the earnings. The question is of the magnitude and quantum, but we believe it will still have an adverse bearing on investor sentiment, to say the least. So, in the shorter term, the sentiment could be slightly tepid and worrisome, considering where Tata Steel is positioned in the sector and how its operations are being impacted. However, from a longer lens, the business is sustainable. It is robust. It has the ability to recoup margins as and when the operating environment improves and efficiencies start kicking in. Efficiency is a project that they continually work on and they're committed to. So yeah, that's what we expect of the earnings print today.
All right, Nirav, Karkera there. We are short on time, but thanks a lot for taking out time and sharing your insights with us this morning. It was a pleasure chatting with you. Well, with that, let me get back to Hemen and talk about specific stocks. Hemen, I want to talk to you about Tata Consumer. Given the fact that the numbers were pretty okay, they were slightly above estimates. And this morning, we have Morgan Stanley coming out with a report wherein it has an overweight rating on the stock, target price at 933 rupees per share. It's already above that 900 mark right now. The brokerage also believes that strong growth trend in growth businesses like Sampann and others are a big positive, but market share loss in tea and salt could be a negative for the company going forward. That's what Morgan Stanley believes. But looking at the stock performance, given the fact that FMCG pack has been under pressure on and off, but in the wake of that, this stock has done pretty well, given the fact that it is close to its 52-week highs of 928 or thereabouts. Going forward, do you think that levels of 950, 960 could be topped anytime soon?
Absolutely, Nandita. You hit the nail on the head. We've taken some time to do this. Frankly speaking, it's been moving sideways for almost 27, 28 months. But now we've seen some traction coming. And like you mentioned, we closed to its all-time high. The markets are lower. Many of the stocks are significantly lower. But Tata Consumer Products is close to its all-time high. And yes, I think what you say makes sense also. We should be probably going on to 950, 960 unless the market itself misfires. So standalone, Tata Consumer has been a late bloomer, so to speak, but stands out, and yes, 960 seems to be on the horizon, and we're breaking out of this range after almost 27 months, Nandita. So I believe further upside seems to be on the cards.
All right, further upside seems to be on the cards for Tata Consumer, but let's take up some viewer queries on that note. The first one is coming in from Sai Prasad, and he wants to know your thoughts on Suson. Now, we all know that the stock was on an upward trajectory just a couple of weeks ago, but off late the up move has kind of fizzled out. Over the last 5 sessions, it has lost somewhere around 5% or thereabouts. But for somebody wanting to invest in a Suson, would you advise him to do that?
Firstly, I'd wait a bit. Things should take some time to pan out, and the stock has moved from 7 to 34. So it's moved almost 5 times. So if the stock moves 5 times, I'd say wait a bit, wait for a time and a price retracement, wait for sanity to prevail, laws of gravity to kick in. There's nothing wrong. It's just that we've moved too fast, too soon. And historically, we are closer to resistance levels. So expecting the stock to make significant headway at this point without a correction seems a bit far-fetched. So I would wait for a time and a price retracement. Currently, I'm not sure this is the right time to buy, Nandita.
All right, wait it out a bit when it comes to Suson, not the right time to buy. I hope that answers your query. But let me take up the next query on M&M. This one is coming in from Siddharth Jain. Wants to know your thoughts on this stock. Of course, we have the auto sales figures trickling in today, so the auto pack will be in focus. But the auto pack has been under pressure. In fact, it has been in reverse gear for quite some time now. Even yesterday, it was among the top laggards. And particularly for M&M, over the last 1 month, it has lost somewhere around 5% or thereabouts. So in the auto pack, how does M&M stack up now?
I think it doesn't stack up too well, Nandita. Like you mentioned, the month has been good. And there's a rounding top, there's a distribution pattern happening. It's close below the 55-day exponential moving average. Mechanical indicators have given crossover sales, lower top, lower bottom. Frankly speaking, everything seems to suggest that we formed a small top. I would say maybe a short to medium term. The long-term picture still remains in an uptrend. This last month, we have posted a fresh all-time high. But yes, short to medium term, it's heavy, it's corrective, and it's going to take some time. Everything has turned slightly negative for the time being. So we can see some more pressure coming in. Support comes in at 1440, 1390. At one of these levels, we'll see stability coming in. So yeah, near term, the picture has gone for a toss.
All right, things not looking all that hunky-dory for M&M at the current juncture. Hope that answers your query, but let's take up the next query. This one is coming in from Sunil Shroff on Canara Bank. Stock has done well on a 6-month basis, and even over the last 5 days or thereabouts, it has gained 8% or so. And numbers from PSU Banking Pack have been mixed, but I think for Canara Bank it was pretty okay. So how would you say the charts are looking at the current juncture for Canara Bank, given the fact that it is, in fact, it hit a fresh 52-week high in yesterday's session?
A lot of resilience coming in Canara Bank, Nandita. Fresh 5-year high coming in yesterday. Market is still relatively wobbly from that point of view. So the setup is positive. We posted a longer term bottom in 2020, Nandita. And from there, we've seen an upside coming, and an upside is still valid on and intact. So gradually, we should see this gravitate towards 420 and 450. So I would be more positive than negative. Buying fresh, I would wait a bit. You have the FOMC meeting today. So I would just be cautious about that. But otherwise, standalone, CanBank looks to be a bright spot.
All right, Canara Bank looking to be a bright spot. Hope that answers your query. We also have a query coming in on Dixon Tech. This one is from D Naga and wants to know your thoughts on how the charts are stacking up at the current juncture. The numbers are pretty good, but of course we know that the stock has lost steam over the last few months. Even though on a 6-month basis it is up somewhere around 75%. Do you think this is a good opportunity to buy the stock? The dip that we are seeing in the stock?
I'd wait a bit, Nandita. The short-term picture is corrective. Once again, lower tops, lower bottoms, indicators giving a crossover sell, negative divergence, ticking all boxes for a technical decline. But once again, there's a short-term view, not a medium-term view. So the stock is tired. Not surprising, 2600 to 5600 over the last 8 months is a bit too much. So we could be walking into a correction of a greater degree. So buying the dip, I would wait a bit. I wouldn't do anything before 4900. So I'd wait a bit, let the support play out, let the stock stabilize. Currently, there are near-term negatives. My fear is this might just expand into the weekly chart, so I wait a bit.
All right, wait it out. Look for levels of 4,900 before buying into this one. But next query, of course, is on DB Realty. This is one stock that has been buzzing. In fact, the entire realty basket has been a buzz. This query is coming in from Anthony Deepak. Wants to know if it's the right time to buy. Would you wait out for a dip, or would you say that, just ride the rally and buy into it now?
I'd wait for the dip. I'm slightly conservative by nature. The NSE or BSE Realty Index has completed a 12-year consolidation for the next couple of years. All realty stocks with correction should do well. DLF leads it. Standalone DB Realty has moved up from 135 to 174 in 4 trading sessions. I'd wait just a wee bit. A close above 180 would mean that it will, a sustainable close would mean that it's taking off for the next round of its up move. I'd wait just a bit for a correction.
All right, wait for correction before buying into a DB Realty. Hope that answers your query. But just a couple of more queries, given the fact that we are a little short on time today. Siemens is one stock that was in focus. Of course, it was reacting to some news flow, but the stock was top F&O gainer, loser rather, yesterday. How should one play this one now, Hemen?
If you're a longer-term player, it makes sense to spread your purchases, buy it on decline, but nothing before 3100. I see stability at 3000, 3100. And that breaks 2700. The long-term picture seems fine, but currently there has been a breakdown. The technical picture has taken a hit. So I'd wait for 3000, 3100 level to go long.
All right, that's the view on Siemens. But the last query for today coming in from Deepa wants to know your thoughts on SBI Card. Of course, numbers weren't all that impressive and the stock reacted to that as well. I think it's moving towards its 52-week lows, to say the least. If somebody is invested in the stock, should they look at booking losses or perhaps wait out for a recovery? Or How should they approach it now?
Well, frankly speaking, Nandita, that's a difficult call to make because, like you said, it's moving towards the 52-week low. Technically, things are not looking good. The only redeeming factor, if any, is that it's oversold. Once again, being oversold does not mean that the recovery in the stock moves up. We need positive price action to follow. There's been a huge volume spike, not yesterday, day before. That's 70 lakh shares on the NSE cash market, and this volume is highest in the last 8 months, 10 months. So these are not delivery marking figures, these are gross figures. But if this is a high delivery marking, I would say the stock fall from 930 to 730, and there's such a huge volume spike. I believe smart money would have bought. So I'd wait just a wee bit to play out. If 732 holds in terms of closing for the next 5-7 trading sessions, we see signs of stability. But up till now, I totally agree, Nandita, doesn't look good, and it has been a underperformer the last 1.5 years. And except this volume oversold situation, there's nothing redeeming yet.
All right, that's the view on SBI Card. Things not looking pretty at the current juncture. But this wraps up our query segment for today, Hemen. Before I let you go, what are the recommendations that you have for viewers this morning?
Okay, I have a buy call on UPL intraday at 540, stop loss 535, target 550. Secondly, a buy call on Godrej Consumer at 990, stop loss 975, target 1020. I wouldn't be, honestly speaking, I wouldn't be too excited about trading. We have the FOMC meeting, markets are iffy. There's a overhang. So I'd be just, I would frankly speaking prefer to stay away and let's see what announcements happen at 11:30 at night. You have the US Treasury yield at 4.92. You have the dollar index at 6.60. Things are still a bit too fluid to, be very active. I'd say sit it out, wait for 1 month.
All right, that's the view then. Of course, we have the FOMC meeting outcome tonight and expect some bit of caution in trade today. With that, Hemen, thanks a lot for taking out time and joining in this morning. As usual, it was a pleasure chatting with you this morning.
Yeah.
But with that, we've come to the end of this edition of Morning Trade. Thanks a lot for tuning in from me and the entire team. Thank you, but stay tuned because coming up next is Opening Bell.